let's go. We are live on YouTube as well. Let me just check that. Yeah, perfect. Okay, cool. Let's start the weekly outlook. We've had a ton happening over the weekend. We're going to try to pull up some articles, go over that as well, do a quick fundamental analysis, move on to the technical side. If you guys have any questions here on Zoom, you can just unmute and ask. For YouTube, they can put it into the chat. Alright, quick little recap from last week. We had inflation data points coming out, which confirmed that we are now moving towards that stagflation type of situation, where we had CPI coming up to 0.4%, higher than the forecast. Month over month also came out to what we're forecasting, but the year over year came out higher. So core CPI and CPI year over year showing us that inflation is obviously increasing. And then from PPI side, we have now PPI sitting closer to the 6% when you're looking at the year over year, where we had a massive increase in the month over month from the previous, almost double of last month. And then core PPI also increased up to 1%. So the markets have now basically fully ruled out a Fed rate cut this year, with some traders actually pricing in the possibility of a rate hike by December instead. So first we had expectations of 70% expectations of rate increase by April of next year, but now we're coming back to the possibility of 20% for October rate hike and then 30% for December rate hike. When we look at retail sales, those have also dropped compared to the previous right here as well, but it did come back, and it was pretty much expected. So it wasn't a massive drop. It wasn't something that we weren't expecting at all, in line with expectations, but also slowing from March's downward revised 1.6% that we saw with the month over month. Sales excluding autos also rose 0.7%, which is that core retail sales that we're getting here. Initial claims for unemployment have also come out a lot higher and slightly above the estimates here, while still continuing claims increased to 24,000 to 1.78 million, I believe. Consumer is still spending though, so we're still seeing that consumers are still obviously keeping the retail side pretty strong. The labor market overall is still holding just from NFP data points that we got earlier this month, but inflation is basically at a 3-year high, with producer prices running at a 4-year high, which is obviously not a normal inflation spike. This is more of a structural, war-driven supply shock inflation situation that the Fed at the moment has zero tools to fix. Warsh cannot cut any sort of interest rates into a 3.8% CPI. He cannot cut while we're seeing that oil is trading above the $100 mark here now again, and we've been trading same exact environment for pretty much the last 3 weeks. We're coming into 4 weeks now. Anytime there's news around escalations or anything like that, oil pushes back up above the 100 mark, and we continue to target 105, 106, those levels here. And so basically the market knows this, and that's why rate hikes bets are now rising to a 30% probability for December and 20% for October. We also had the Beijing summit last week, and a lot of the people, for the most part, were pricing in the fact that Trump will be able to get a win, in the sense that he'll be able to pressurize the Chinese president a little bit more in order for him to go and persuade Iran. But obviously that didn't happen. Both sides did agree that the Strait of Hormuz should be open, but he basically walked out with, no deal. For the markets, the reason why this was so important is because the summit appeared to reinforce expectations that Washington and Beijing continue to remain focused on preventing any renewed escalation in trade and technology tensions, especially around the conversations with China versus Taiwan. Trump has also, however, invited the Chinese president for a state visit to Washington in September. But beyond just these trade optics, however, there's no developments that were significant enough to really shift the overall broader narrative around the U.S. and China relationships. We also saw that in terms of equities, if you're trading, US 30, especially if you're trading NASDAQ or any individual tech stocks, we saw a bit more of a push and a bit more of an optimism, especially with NVIDIA, as China said that that they're open to working with American companies to basically target the Chinese domestic markets. What we're also seeing, if there's anything else I'm remembering from last week, I think that's pretty much the recap. But we're just seeing that main thing is we haven't had a deal when it comes to the US and Iran. Alright, so far so good on the recap. Any questions?
No, good.
Okay, perfect. Let's pull up some articles then. Let's go over to economics. And politics. We already have that. The news that I'm trying to look for here was around the UK because that's going to be significant for any pound pairs. The same thing. Alright, let's take a look at these articles here now. Alright, we have a drone attack sparked a fire at UAE nuclear plant, spotlighting the risk of a fragile ceasefire. He's making his... Or for Iran, the clock is ticking and they better get moving fast or there won't be anything left of them. So that continues to push the war escalation narrative and the sentiment. We're going to continue to see those equities basically selling off from a technical perspective. Just based off fundamentals, just looking at this, we're setting up the market sentiment, which we already know for the last 3 weeks of the same exact copy-paste situation going on, that we're going to get some gaps at market open, especially around London and New York. Let's see if there's anything else. I think that's pretty much it. So with US and Iran, the main thing is still the war escalations. So if he does actually end up attacking Trump, when I say he, if he actually starts resuming those attacks, then we're going to see massive reactions in the market again. For the most part, the market is already preparing for a move like that, but it's just going to be amplified throughout the week as we continue to get more data points, which we will get to in just a little bit here. Now, coming here, we talked about the yields and we talked about all that stuff last week. We're pretty much sitting in the same exact situation where we're going to see a continuation of that going into this week as well. But the important thing, or the day that the markets are going to react to that to the most, is going to be on Wednesday when you get the FOMC meeting minutes coming out. So this is going to be the first Fed signal, or the first signal from the new Fed chair, of whether or not we're actually going to get those rate cuts. And we're going to see that the bond market is going to be a lot more volatile on Wednesday. But overall, Warsh has said during his confirmation hearing that he wants messier interest rate setting meetings where, there's going to be a good, so quote unquote, what he said was like a family fight that can lead to better economic decisions. and he's most likely to get that as well. But one downside of this is that we're not going to get that press conference that we usually get with Powell after the interest rates and the FOMC statements are released. So it's really just going to be watching whatever other FOMC members are saying. Any surprises basically in the market's going to be more reactive to that. Inflation fears, we've already talked about that with CPI and PPI. Let's take a look at any oil news. Alright, not much going on there. On the UK side, the one thing that I want to talk about was cable is currently one of the worst performing major currency. And it's going to continue like that this week. Let's come over to GBP USD. The massive sell-off that we're seeing there. And a lot of that is also being driven by the UK political crisis. The Prime Minister is facing one of the most serious leadership challenges of his entire career. We saw that the UK Health Secretary had resigned, saying that he lost confidence in the Prime Minister's leadership. More than 80 Labour MPs have now publicly called for him to step down, and the trigger was a catastrophic local election performance. So we're seeing that there's massive reactions where we're seeing that the pound weakness is now starting to increase due to the political news from the pound, the UK. The main thing here, though, is when you're looking at the overall macro environment of all these assets, is that usually we're looking for more of where is the smart money positioning, whether we're seeing more of a risk on, risk off sentiment, whether we're seeing more of safe haven moves and things like that. And for a lot of these pairs, there's just been so much happening from a political perspective, especially with any JPY pairs. We have been seeing those massive reactions, right? And that is on any Japanese authorities making statements around potential intervention, right? You got that massive sell-off. From the geopolitical side, all across the board, every single financial market is being affected by this U.S. and Iran war. It's being affected by, with this new Fed chair stepping in. What does that mean for the dollar? What does it mean for the U.S. economy as well? With inflation increasing domestically in the U.S., that's also putting more pressure on Trump as well to potentially get a deal. Equities are, facing a lot of this as well. And now, with any GBP pair that you're trading, it's being sold off heavily due to that political news that we're getting from the UK here. And that's pretty much it from a fundamental perspective. Any questions that we have here is basically just a build on of all the market updates that we have been doing last week and even the weekly outlook from last week. It's pretty straightforward.
Yeah, it's just all of the same, isn't it, really?
Yeah. It's just copy-paste of the same exact market environment. We're really hoping that we would end up getting some positive news over the weekend, and especially from the summit, which obviously did not happen. Alright, so we are already starting off the week quite volatile from so much just happening over the weekend. The war escalation, coming back and everything like that. Now this week we have quite easy Monday morning, and then on Tuesday we have CPI coming out from Canada. Not so much happening from the US, so those are going to be all technical moves that we're going to be trading both days. And we also have any headline updates, especially with the US and Iran, with just Trump tweeting things like this, which will be moving the markets for the time being, and then just going back into those potential consolidation areas or so. Wednesday is going to be the most volatile day. That's the day that we're prepping for on Monday and Tuesday. We are going to be having a lot more market updates throughout this week as well, but that's the day where you're going to have the most volatility. Regardless of whatever market that you're in, stocks, Forex, crypto, oil, silver, whatever that you're trading, futures, options, doesn't really matter. You are going to be affected by this. You have to pay attention to what they're going to be saying in the meeting minutes. Like I said, that's the first signal from the new Fed chair of where they're potentially expecting in terms of rate cuts, or even not rate cuts, rate hikes. Rate cuts are completely out of the picture now. From a smart money positioning, smart money right now is long US dollar across the board, especially as you continue to get that war escalation news and you start to get more inflows into the US dollar being at the world reserve currency and everything basically being traded in the US dollar, related to the war. The rate hike narrative has completely flipped any of the carry trade calculations that a lot of the analysts that we're doing. When you're looking at the articles, we're looking at Bank of America analysts are doing, how are they positioning, and then also with Goldman, with JP, with a lot of the asset management firms. Speculators are building short on euros, and of course with the GBP positions as well against the US dollar. So you're seeing, especially with GBP USD being affected by the UK political news plus the USD strength that we're getting. With gold, let's come over to gold. We had a massive sell-off on gold last week as well. It suffered one of its most punishing sessions, is how one of the analysts described it. During the entire 2026 cycle on Friday, we saw a lot of spot prices collapsing here. We also saw that the weekly candles were also starting to come out and breaking the previous support areas from a pure price action perspective. So we're expecting that continuation as the US dollar continues to strengthen here as well. From the oil perspective, we're going to see that oil is going to continue pushing back up bullish. So it's been sitting in this consolidation, and really since March, it's just been a copy-paste situation happening in terms of trades. Anytime price comes back into these 110, 112 areas, we get news about, well, we're about to get a negotiation, or we're working towards a potential resolution, and then gold or oil starts to drop below the 100 mark, and then again it's a copy paste situation. Right now we're just going to look for that continuation back up into the 110 areas and then pullbacks below the 100 area here again. So this is basically what's happening. All the CTAs and energy funds are basically fully committed to just buying oil at the moment. The only unwind catalyst here is going to be a confirmed Hormuz reopening deal, and that's obviously not happening this week based on the talk failures that we have gotten. And then from there, we have also, right after market close on Wednesday, we have the NVIDIA earnings coming out, which is also going to be very important because we were talking about the CEOs, joining Trump to the summit, and NVIDIA CEO was one of them as well. So they ended up getting a bit of an optimism with China saying that, yeah, we're going to open up our markets to you guys. And so if that actually is true, and we actually look at their guidance when NVIDIA's earnings comes out, then that's going to tell us whether that was just trade optics once again, a diplomatic kind of thing to say, or if it's actually going to happen. The only important thing here to understand also with that is not a single chip has been shipped yet, right? Beijing is still stalling, so that's why that guidance is going to be so important. And then on Thursday, we have PMI data coming out. Right now, from a surface level, manufacturing side looks pretty strong. But all of that is just the war-driven stockpiling that's happening, right? And so if we actually see that manufacturing PMI drops below 53, or it comes closer to the 50 mark, or even below 50, then we are going to be moving into an industry contraction. And that is going to confirm that we're in that stagflation situation. Then on Friday, we end off quite easy, just consumer sentiment. Any questions on the fundamental side before we move on to the technical?
All good here.
All right. Let's come over to US 30. Over to the weekly time frame. So from a pure technical perspective, you see that we've been in a massive bullish momentum, but these last couple of weeks we have maintained a bit of consolidation in terms of price not really breaking past and closing above that 50,000 mark, and then coming back and closing below it, almost closing like a doji. The last weekly candle actually closed at the bottom of its own range, and then this new weekly candle just started forming here. So what I'm going to do in a situation like this is we're going to map out this level right here to be our support, which is going to be our range, which is going to be 48,900. And we have our resistance sitting at the current weekly high If it can break past that, then we're going to come back and target 50,000. 49,500 is what I'll do. I'm just going to round it. Then come over to the daily time frame. Daily time frame is now entering into a peak consolidation level. So that's what we need to watch out for here, where even here when price tried to break below this level, first of all it consolidated, it broke below, tapped right into that support, you got a retracement, and then even below that consolidation, and then a continuation down. But the point being is that this is where the liquidity generation is. As soon as price came back to revisit into this area, you had the same exact situation for a couple of daily candles. We closed like a wick where there was very little volume. We tried to break above it, couldn't really do that. We had to come back for one last visit before tapping into that 50,000 level here once again. So we are revisiting this area here again. So if we're looking for any sells, we're going to wait for price to break its own daily low and then continue pushing down into that 48,900 level. And then after that, we're just expecting that price is going to consolidate here again, potentially even going into Wednesday until we can get any updates on those headlines with the US and Iran. Either that's going to be Trump continuing with his attacks, or we're going to get some sort of conversation around we might get the Hormuz open or something like that. That's going to bring in the optimism. Then Wednesday is going to be important with the FOMC minutes coming out. So here, looking at the 4-hour time frame, I mapped out a support, which is the current daily candle's low. If you look to the left, it also checks off as a minor resistance for this area. So drop down to the 4-hour time frame. I'm looking to the left, I see that consolidation resistance level right around there. Drop down to the 1-hour time frame, and then this is where the market opened up with this bullish candle right here. And then after that, we've been bearish, which kind of just tapped into this area. We are creating lows compared to the previous levels. So what I'm looking for going into London session or even into New York session is a potential retracement to come back into 50,500. As that happens, you still have price sitting around 49, almost 300. You still have about 200 point range here. After that rejection up top here, I'm going to look for those continued sells to come back into the zone. So taking advantage of that 200 point zone. But now I have confirmations that I've gotten a retracement. Price is going to continue pushing down as it breaks below that. A continuation down into 48,900. Now let's say if price is this, where you're seeing that profit taking happening from sellers, price needs to push back up a little bit higher. One other level that I am targeting to see if price is going to come back to grab liquidity here is going to be right up top here. So the key thing to understand is whenever I'm doing the analysis, whenever we're doing boot camps, I always talk about creating your zones within your higher time frame. So like on the weekly time frame, the weekly time frame, I have my top wick rejection right here, and then I have my bottom wick rejection down here. So this is my entire range. If price breaks above its own weekly high, that's the only way that I know that it's now hunting for another liquidity zone. So I'm not mapping this out as my potential target. My potential target for buys is still going to be pushing back up into the 49,500 area. But I'm saying that if price breaks above that, then I know that even based off of higher time frames, we don't have enough liquidity for that continued drop. But that doesn't mean that we have optimism just yet either. What that would look like from a technical perspective is that you've had this massive sell-off. Now you need price to hold on to a support, come back up, potentially give you a retracement here, and then continue pushing down, so then you can continue with your bearish structure. Does that make sense?
Yes.
Okay, perfect. So that's just the liquidity area. Now we drop down to the 1-hour time frame. This is what we're looking at. We're not really going to drop anything lower than that, given that we're not really going to be trading this in Asian session. Let's come over to GBP USD. So we just went through the fundamentals for this as well. We have the last weekly candle also closing at the bottom of its own range. What I'm doing is looking to the left, and I see that this is the next support area. So I'm going to map this out to 1.326 level. What I'm going to do is create my resistance right around here, which is that previous resistance, and then as I look to the most current price action, I see that that's also been respected as support in the past, and a little bit of resistance here. So that is going to be, I'm just going to call it 1.34, or let's just do 335, I guess. That's too high up there. 1.335, more like that. drop down to the daily time frame, same thing as US 30. GBP USD is now also entering into a consolidation level. We've had consolidation here to the left and then a nice push back up bullish. Price came back and tapped into this area. Once again, nice push bullish, and then retracements here. So basically an area where every time price exits out of it, I do see that there is a ton of volume even for retracement. So that is the type of move that we can take advantage of as soon as price taps into this next support and then pushes back up bullish. Now obviously you need the fundamental catalyst to help you push back up bullish from up top here, but for the time being we can take advantage of the sells that are setting up here. So what I'm going to do is, if I look at the current price action from up top here, no top wick, didn't even try to kick out the buyers at all in that daily candle, and then continue to push back down. We have a bit of a top wick, bottom wick, but not so much of the volume of the bearish pressure. The next candle had very nice strong bearish pressure. Two candles are pretty much the same. The current daily candle, no top wick, it continues to break its own bottom wick. So what I'm going to do is I'm going to map out this level here. I'm going to check out the zone right below it, which should be about 50 pips that you can continue to catch, and if price drops even further, then you have about 120 pips to catch to the downside. From a fundamental perspective, any GBP pairs are going to be straight sells at the moment, but still take into account the technical side where you can't continue to just look for sells, especially at the lows. What I see is a massive sell-off that has happened ever since that 1.345 area basically has been broken. So what I want to see here at some point is some sort of a retracement, at least into that 1.335 or a little bit higher into 1.34, and then a continuation down. That's a much better swing trade opportunity, but other than that you can still take advantage of this quick day trade or even scalp opportunity here. But for swing trades, I do want to see a retracement back up into either 1.335 or a little bit higher into 1.34, which if you look to the left is also kind of closer to the support area here too. So quick retracement instead of just one massive bearish pressure to the downside. If I drop down to the 1 hour time frame, that starts to give me confirmation of a bit of the volume dying out as well, as you start to see that the candles start to get smaller, the bodies are starting to get smaller, and you're starting to see that there's not as much volume. So what's going to happen here is either you get consolidation and then you get a drop, and that consolidation drop is going to happen if there's enough bearish pressure that's not really giving us enough momentum to push back up bullish, or you get that retracement and then a sell-off. Make sense?
Yes, yes.
All right. Any questions so far?
I'm okay.
All right. Let's go over to Euro USD then. Euro USD, same exact thing as GBP USD in terms of price action. We're going to map out this support, 1.158. And I'm not going to map out the resistance here just yet. I'm going to drop down to... Okay. I'm going to drop down to the daily time frame here. And I'm going to map out the current daily high, which is 1.163. If I look to the left, that's all resistance right here. That's currently the current candle's top wick rejection, previous support. Once again, same exact situation as US 30 and GBP USD entering into another level of consolidation. So here we see that price came back, held onto a support, and then we got a nice push back up. Price did a break and retest, which gave it enough momentum to come back into those previous highs. You're getting a lot of those wick rejections, a lot of that consolidation right around that area, another nice push back up. Overall, you're just seeing that there's a lot of reaction into this area, and that's the exact same thing that we're going to expect price to do. I'm going to expect price to come back down and tap into that 1.158, if not a little bit lower into those wick rejections, and then give me another bounce back up. The same exact situation as GBP USD, where we have been selling off for quite a few days. So at some point I do want to see a retracement, but there's a higher chance, given that we're sitting in this area, that we're going to end up getting consolidation instead and then a movement. Drop down to the 4 hour time frame. You're getting a little break and retest here, but the candle did gap down. So there's not much happening here in Asian session, but what we want to see going into London is price just kind of consolidating here a little bit more and then drop back down, or give me a bigger retracement. Same exact thing as GBP USD. mapping out any liquidity areas, which in this case would be up top here. So if price breaks above its own daily high, then you are looking for potential buys to come back up a little bit higher for about another 40 pip range for another liquidity grab and then a continuation down. For these pairs specifically, the reason why I'm looking for sells is because of that US dollar strength that we just talked about from a fundamental perspective. Then coming over to GBP JPY, last week we got a massive top wick rejection and then came back and closed back down at the bottom of its own range, but not really breaking the previous lows. So I'm going to map out the support. And then for resistance, I am looking to the left and I'm looking at these candles here very specifically, which is also this resistance level right here. Drop down to the daily. On the daily time frame, that is the support. If I look to the left, then again I see that area being respected as resistance. A quick little break above, really couldn't sustain it, so then came right back down. When I'm looking at the current daily candle, I see that it's already made a top wick. If it can continue breaking its own low, then we're looking for sells to come back down into that 210.75 area, which is about another 50 pips. For a complete wick fill, you're going to get about 80 pips to the downside. If you see that continued weakness in the pound, which is again from the fundamental perspective of the Labour Party division, then you have a full trade of about 129 pips. For this pair, it is also going to be affected by Wednesday and Thursday. One thing that you have to be careful of here before just trying to shoot for the 129 pip trade is that if price drops back down here, we have seen a lot of wick rejections right into this level. So we want to make sure that we understand what could be the potential limitation of our trade, which is just that 40, 50, whatever pip trade here, and then price bounces back up to reject off of that zone, and we get candle closures up top here, maybe potentially another top wick or something like that for the next candle to continue down. So basically it could play out over the next 2-3 days, or you could just get a wick rejection and price is not ready to just push back down bearish, so then it comes back up into that 212.5 area, which is a very important level just looking at the previous price actions. So your sells here are going to be below the zone. For any buys, you're looking for a support formation, and then you're waiting for price to break its own 4-hour high right here and then push back up. Let's come over to gold. So this is why I'm saying that we're going to see that continued sell-off here in gold because of the dollar as well. So for gold, we're going to map out the candle body open because it's a lot more volatile. So if it does break above that, then we know that we're capitalizing off of price retracing this entire sell-off that happened here. So that's that 450.4 level. It's coming down into the support right down here into 426.4. Drop down to the daily. It has just now cleared below this previous support area and now pretty much straight down into 4426.4. If you come over to the 4-hour time frame, massive sell-off that has happened from that 46, I would say about 90 area or so, which is your core consolidation right around here. So a straight sell-off from there in the 4-hour time frame, still bearish but start to consolidate a little bit more, and then right now I just created a top wick, start to push back down. Drop down to the 1-hour time frame, you start to see that consolidation more clearly. So what you want to see here, even in Asian session, is actual candle closure bearish here. Next candle gives you a top wick or a break and retest, and then look for that sell. Try not even try, actually just don't even trade on a candle that has not closed below a support level or above a resistance level. Do not try to trade breakouts in the current market environment. Your accounts will get blown. You will get stuck in those liquidity grabs. You will get stuck in those fake outs. Wait for your candle closures and then look for your trade opportunities. Let's come over to silver. Oh, this is from last week. Alright, with silver, you got your top wick rejection, 76.88. We have our bottom wick, our entire range that we are targeting at the moment, unless price can continue breaking below that, which is 72.52 level. Drop down to the daily time frame. We have created a top wick, massive sell-off from the $88 mark on Thursday, and now the next stop is going to be 72.52. So a very quick scalp opportunity there. Drop down to the 4-hour time frame, massive sell-off. So at some point we are going to expect some sort of retracement. So it's either going to happen right down into 72.52 area, or I'm also expecting that price can potentially react off of the current level that's sitting at right around here. So I'm looking for a bit of a retracement, come back into that 76.88 or even 76 level, and then continue with that sell-off, which is going to be a much healthier sell-off, which is also going to give you the opportunity to look for a deeper sell, a deeper TP, or you're waiting for a consolidation here, and then after that, a bit more of a continuation. If the consolidation happens, then that tells me that could be the potential limitation of my trade, unless there's a fundamental catalyst that's going to push this even further down. Any questions on silver?
Nothing here, DJ.
All right. It is a massive sell-off, so you do have to wait for some sort of retracements, even if you're trading off the 1 hour or the 30-minute. Just keep in mind that the overall time frame is massively bearish, so you don't want to get stuck in a massive wick rejections consolidation. So this is the type of situation that we're looking at. That's why I'm saying be a little bit more patient. Now with oil, you're going to drop down to the daily. It's going to be a lot easier to mark off these levels. We have the previous highs at, I'm going to say 104. Those are the previous highs. This is the range that price has been trading in. Anytime there's any sort of news around an escalation or some sort of potential peace talks or anything like that, but no confirmations as of yet. So this is our core consolidation here. Drop down to the 4-hour time frame. We had a gap down on Thursday, which the market has completely filled in. And then we had a gap up today. We have yet to fill in that gap. But what we are entering is a previous resistance closer to that 103.7 or even 104 level. What I want to see is, right now, just talks about, Iran's running out of time, yada, yada, yada. We haven't had any confirmations of any actual attacks or anything like that. One attack in the nuclear plant in UAE, but that's pretty much it. So if I see that price is reacting off of this, and then we see another continued sell-off opportunity, then I'm going to be targeting the 100 mark. The 100 mark is pretty much the flipping point of the market. Anytime we get any sort of optimism or, paused conversations around the war, then price comes back into that 100 mark. Anytime we get conversations of, we're hoping to get a deal, there's a mediator, there's conversations going on, then price drops below that 100 mark. So at the bare minimum, even if you're looking for sells, you can look for sells to come back down to 100. If you're looking for any buy opportunities, I'm going to be waiting for 104 to be broken and then continuation back up. So that way I have a clear shot move coming up into around 107 and then ultimately into 110 level. And then if I see that there's more optimism, we get those headline developments that Iran's probably coming back with, let's say, another proposal or something like that, then we're expecting oil to drop below 100, but the limitation there could be potentially coming back into that 96 mark. Make sense? Any questions?
All good.
All right. So that's the weekly outlook. I try to keep it as short as possible, so I kind of gave you guys the summaries of all of these points. But if you have any questions, please let me know.